We're coming into the halving. The supply is dropping. We're starting to see presidential candidates and financial institutions talking about, buying up Bitcoin. I thought this was the perfect conditions for there to be this massive escalation. I expected it to be, north of 100 by now, and then we see it drop down to 50. I do want to get a little bit of understanding what's driving this. And, we'll talk about where you expect Bitcoin to be in the long term, the fundamentals of, and I've had conversations recently with Kathy Wood on this subject, and Michael Saylor, and now you. I'm hitting the triumvirate here. So what drives the price when it goes up and down? Is it just supply and demand? Why are we not seeing up and to the right?
Yeah. So again, I would posit that over the right time frame with the right perspective, it is up and to the right. What happens though when you zoom in, there's a lot of noise. Okay, so let's talk about the noise. Where does that noise come from? Why does it not look like that on a line chart base 10 as opposed to an exponential chart, log chart when you zoom out? Okay,
right.
The idea is very simple. You have something that has a fixed supply, and you are valuing that in something that has an infinitely growing supply, namely the US dollar. Okay, and the rate at which that supply is being created is actually increasing, which is not supposed to be able to happen because it was originally supposed to be based on gold, but we no longer do that. So we can more or less, we meaning our overlords, can more or less create dollars at will as often as they want, which is what they do, right? So I think during the COVID lockdowns, we printed something like 25% of, or we created 25% of the new money supply versus all dollars that had ever existed since, the Federal Reserve was created.
It's nice to be the king.
Yeah, well, okay, I guess, but they have the same money we do. And so they're being devalued the same way we are. It's just, I'm guessing that they're wealthier than a lot of the people at the bottom of the U.S. income pyramid who don't have assets they can put those dollars into. Okay, so back to Bitcoin. So the reason that the price fluctuates is a couple of things. One, right, Bitcoin as a scarce asset generally will act as a liquidity suck for dollars that are floating around. Most scarce assets eventually do, right? Artists, dead artists are notoriously good at being captured by the wealthy over time because it was one of the best scarce long-term assets we ever had. Physical property.
Central Park real estate.
Central Park real estate, exactly. So for the first time, we have a digital version of this that's mathematically provably scarce over time. So naturally, it's going to act as a liquidity suck. However, it's a new asset. 15 years in the big picture is nothing. Okay, we have to go back, to oil as kind of the latest and previous new asset class. I mean, obviously, oil's been around forever, but it wasn't as important to society until we had combustion engines that would need it, and all of a sudden, it became, the liquid gold, right? So now we have a digital gold, if we want to focus on its value, its use as a store of value, and it's still new. Like I said, 15 years in the big picture is not a long time. So you have the trials and tribulations of the fact that this is a new asset class. People are still learning. People are still coming in, right? It is not a hedge against anything yet because it's too new, right? And so we're still at this point where it's being hoarded by the masses. There was a book written in the 70s by an Austrian economist, even before the internet existed, who predicted that if we had private money that was sound, it would slowly be hoarded by the masses before it became useful. And it's astounding to watch Bitcoin play out his kind of playbook almost to the letter 40 years before the internet. So that's what's happening. But in between, the government adjusts the liquidity of money, right? So as inflation started rising, the government tried to take liquidity or money out of circulation, right? By basically, selling assets on its balance sheet. During COVID, it was buying assets onto its balance sheet, which had the wonderful effect of lowering interest rates. So anyway, so this has the effect that risky assets, will go up and down in value based in the short term based upon these changes of liquidity.